Estou passando nesse podcast para dividir uma informação que fez toda a diferença na minha vida. Quer fazer pós-graduação, mas tá impossível correr de um lugar para o outro?
Pois é, ainda mais com o trânsito.
Então você precisa conhecer a educação à distância do Senac. Sabia que é nota máxima no MEC? E tem diversos cursos de pós-graduação para te levar ainda mais longe. 100% online, sem necessidade de TCC e com acesso direto a todos os professores.
Ah, saber isso fez diferença sim.
Inscreva-se já na pós-graduação EAD. Quer saber? Senac EAD.
Now, back to the Larry Kudlow Show. Now, it's time for Protecting Your Investments, sponsored by Colonial Metals Group. Here's Larry Kudlow.
Hello, folks. I'm Larry Kudlow. This is Protecting Your Investments, sponsored by Colonial Metals Group. And our two stars who are going to protect your investment, Jim LeCamp, Senior Vice President at Morgan Stanley, and Jim Iuorio, Director of TJM Institutional Services. Sorry, kids, thank you for your patience today, but the stock market, Dow is up 1,162 points, NASDAQ 886, S&P 500 210. And I just want to add into that, the price of gold closed the week at 2,509. So, what me worry? Everything's going up, Jim Iuorio. Everything's going up. We're levitating. What's going on?
No, everything's not going up. The dollar's still going down, and everything that's denominated in dollars appears to be going up. The Fed is going to ease. I think they'll only go 25 basis points. I'm not sure. I actually do think they should. I think the labor market is much worse than it's being portrayed to us. So for the last year and a half, I've believed in things like gold, silver, Bitcoin, real estate, and stocks to a certain extent. I thought there would be a wicked stock correction that would force the Fed off the sidelines. It wasn't as wicked as I thought. I thought it wasn't over yet, but now it appears to be. If we see some strength on Monday, particularly in the S&Ps above that 55.50 level, I will think that the recent horror of our 8% correction is done and stocks going higher too. But I don't think it's all a good thing. I think that what they're saying is the economy might be crumbling and the Fed is going to be quick to the rescue like they've been in the past.
Well, it's funny. I would say to you the Fed should not cut the rate because we haven't hit the 2% inflation target. And even though industrial production is falling and housing is falling, consumers on the demand side are still strong. And I think the Fed should wait. And I think Jay Powell should say they're going to wait until after the election. I'll probably be wrong, Jim LeCamp, but that's what I think. What do you think about that?
If you look at the chart of inflation in the late 70s, you had lots of little head fakes that inflation was getting better, but it wasn't. And Paul Volcker, in an election year, which we're in again now, cut rates in, 79, and the next thing you know, inflation did rear its ugly head again. And in the early 80s, Ronald Reagan, first 2 years of Ronald Reagan, I don't need to tell you this, Larry, but the first 2 years of Ronald Reagan, inflation spiked up to its highest levels ever. And look, the economy. I agree with Jim Iuorio that the economy is weaker than we think, and the jobs market is weaker than we think as well. In fact, the retail sales numbers yesterday, a lot of that big surprise gain was due to a revision of the previous months downward, which is a neat little trick these statisticians have been doing with the jobs market also all year. And consumer spending is, while it might be okay, consumer savings have pretty much been drained, and inflation is still biting. Let's not forget the inflation rate at, call it 2.5% if you want to. You hear politicians saying, especially in the Biden administration, saying that inflation is coming down. It's not coming down. It's still going higher. So these higher prices that we're all having to deal with, whether it's at McDonald's or buying a house, the higher prices have not gone away, and wages have simply not kept up. So this is still a very tight economy. That said, I think it would be premature to cut rates here, but I think they will. I think they'll do 1/4 point in September.
Jim Iuorio, what about commodities? There's a big. I've looked at the CRB futures. There's a pretty big correction the last, 3 months, maybe 4 months. But they're really still at a high level and well above where they were a year ago. And I just wonder what those commodity signals may mean.
I think the broader commodities, I mentioned gold and silver before. The precious is a totally different thing because that's a dollar hedge. The rest of the commodities, I think, are flashing what I said too, and that the economy is slowing quite a bit. Goldman just came out with a piece over the last couple of days saying they expect revisions at the next unemployment report to be down 600,000 of the previous month's revisions. Now, I didn't get too deep into the article, but that to me is alarming. So to me, again,
600,000 for the month?
I don't think it's for the month. I think it was for like 2 months. I have to read the piece.
Even 2 months. Even 2 months.
Out there. The piece is out there. But anyway, so the point is that I think those jobs have been overstated. I know we joked last time I was talking about second and third job side hustles compared to career full-time jobs. And the things are completely switched. This is not a particularly productive economy, and I think things are showing right now. And I think commodities are reflecting global slowdowns. I think gold and not silver yet. Gold is reflecting what should be poor stewardship of our currency in the next 6 months when things start to hit the fan and the Fed has to put it into overdrive.
I think I'm doing a side hustle. I mean, I'm a
you're the king of side hustles.
I'm a Fox newscaster, and I do this radio things like a side hustle. That's where the big bucks are. Well, not exactly, but it's kind of fun to speculate. What's Jim LeCamp down there in Texas? What's doing with oil? Oil's been soft for quite a while, despite the Middle East and all that. Oil prices have come down. What do you make of it?
Well, I don't think we have to worry about that, and I don't think we have to worry about prices because Kamala Harris is going to put price controls in for us. Yeah. So everything's good. Why aren't we listening to the Bee Gees, by the way? I need to buy some bell bottoms because it looks like we're returning to the failed policies of the 70s. Now, let's get to oil. If she wins, look for oil to go to 125 at least. She's talking about trying to kill fracking, et cetera. And oil's really interesting here, Larry. And if you look at the oil stocks, they're starting to base again. And I think the resources play, I'm glad you brought it up. I think the resources play is where we really need to be looking, not necessarily right now, because if you enter into a recession, which I think is very, very possible, they'll probably trade off first. But then I think we need to load up because the policies, the spending, and what we've got going on geopolitically all point to resources being back in favor, not to mention the dollar. And if she wins and we install new money printing programs and giant boondoggle programs, it's going to be bad for the dollar as well. I like the resources play. I like oil and gas in here. The rig count is way down over the last year. If you talk to people in the patch, which I do every day, if you talk to people in the patch, they'll tell you, look, we've been able to kind of frack our way into keeping supply going to a degree, but these are not our highest quality wells anymore. And with the rig count down, the depletion's going to kick in, and pretty soon you are going to be seeing higher prices no matter what happens in the economy.
Last 45 seconds, Jim Iuorio, what happens to interest rates? Not the Fed funds rate, but the 5 and 10-year notes, for example. They've all come off. Are they going to go down or are they going to go up?
I think rates are going higher over the next 6 months. If you look at the last probably 8 longer-term Treasury bond auctions, at least half, including the last 2, have gone poorly, indicating to me that the demand is not quite there. I think that as they start to shift out the curve to issue bonds, it's going to get worse and worse. I could easily see a 5.5% to 6% 10-year within the next year. But
Jim LeCamp, Senior VP at Morgan Stanley. Jim Iuorio, TJM Institutional Services. I'm Kudlow. It's a side hustle. Money and politics next.